Good morning, everybody. It's Friday, the 13th of May. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Jamie Pakenham-Walsh and Steve O'Hare. How are we doing, gents?
Yeah, very good, thank you. Top of the morning to you.
Indeed. We've made it to the end of another week. It's been an interesting one, that's for sure.
Very interesting.
Let's wrap it up for you all, shall we? Let's get stuck into the headlines. The producer prices moderated slightly yesterday in the US, increased by 0.5% for April, which was in line with the consensus forecast, while the year-on-year rate declined slightly to 11% from 11.5%. Which was above market expectations. We also had initial jobless claims yesterday, which increased slightly to 203,000 in the latest week from a revised 202,000 number. Federal Reserve Chief Powell has backed a 50 basis point rate hike. He confirmed to the Senate yesterday that he is going to be trying to bring inflation back under control, added that it was still appropriate at this stage to increase rates by 50 basis points rather than the 0.75 basis points that we've been hearing speculated about over recent weeks. The volatility in the US markets continued yesterday, very choppy trading with frequent changes in directions and fears and also bargain hunters clashing at the same time. We'll come on to how that looks on the charts very shortly. We also saw some attempt at risk appetite recovering. We saw the US 10-year yields retreat to 2.85% before a small recovery up to 2.88%. And we saw a little bit of a recovery in some of the cryptocurrencies as well. In terms of what's going on with China, there's further concerns over the economy, with the authorities mandating Beijing residents to stay at home for a further 3 days of testing. Their COVID zero policy, is pretty aggressive and is starting to dent the economy. We also saw on the FX side of things, the US dollar and the Swiss franc broke above the parity level on Thursday for the first time since December 2019, and it's managed to hold above that level for now. And finally, Ramsden, the Deputy Governor of the Bank of England, stated that the bank has not gone far enough yet in terms of tightening monetary policy. He also considered that there are upside inflation risks over the medium term, with stronger than expected pressures from rising wages. So let's now move into the charts. Steve, do you want to kick us off today with a few bits?
Yeah, absolutely. I read a story the other day that it's talking about the COVID thing in China. The chances of dying from COVID are actually the same as driving a motorbike to work and getting hit by lightning.
Wow.
It's very specific, isn't it?
That is very specific.
0.0001 or something. So just to sort of like give you that sort of thought.
I mean, they're just trying to eradicate it totally, aren't they? They've got an absolute zero policy on it, from what I've seen.
I mean, they've always been a bit sort of like protective about sort of like, they always wore face masks even years before anything like this happened. So yeah, they have, but so good luck with that. But I just sort of like think when you hear stats like, for a start, I don't own a motorbike and I don't go to work. I sort of like just come downstairs, so I've got even less chance, I suppose. Just and also sort of like, well, we'll start with Bitcoin, dive into Bitcoin, and nice recovery eventually yesterday towards the end of the day, once the shock of the lunar episode has sort of like.
So is that dead now? Because I was trying to look at a price this morning and I wasn't getting one.
There's a few different places you can go, but pretty much it is worth nothing now, and it won't be worth anything. That's what I read yesterday. I read a story about it yesterday. The whole basis of it was that it had to be pegged to the dollar. There's no chance of that anymore. So it's you're getting a little bit of a buyers coming in, sort of like trying to support it, but there's no way it can make its way back. That's what I read yesterday. So I don't know enough about it to sort of like give a fundamental view on it. But the story I also read was that it was a couple of major investment banks caused it, and they basically saw the weaknesses in it and got a load of Bitcoin together, sold a load of Luna using the Bitcoin and collapsed it, and then it's sort of like there's no way back for it. Basically, doesn't matter what you do. So stop buying it at 0.00002. It's not worth it. You think you're getting a good average now, but it doesn't work like that. So yeah, end of the story for Luna by the looks of things. So Bitcoin made a very significant lows we haven't seen since all the way back here, December 2020, which isn't that long ago, I suppose, 18 months ago or whatever we are now, and forming a nice little candle. From a weekly perspective, it looks even better on the daily chart for a little bit of a recovery. I don't think the recovery will be massive, but it's got potential. A nice little morning star formation. You get the sell-off, you get the star, which is a sell-off candle, a negative candle, which makes a extreme low, comes back and closes where it opened, showing that there's buying interest around this level. And then the third candle of the morning star formation is a positive candle, and this is pushing on. So as long as we finish the day positively, we've got a nice little reversal formation. Anything like that, so even just looking from a quick perspective, I would say that has got potential to, let's get the other, that's got potential easy to get to 34,000. We've got this 33,000 resistance level, which was previous support. So 33 to 34,000, 3 or 4,000 on the upside for Bitcoin potentially.
How
We'll
do
also,
you, on the weekly, sorry, Steve, on
yeah,
Bitcoin, how significant do you think the close above the 61.8 level is? Do you think that's
yeah, significant, but I wouldn't. I'd still expect a little bit more of a test. It depends. I suppose if we close really aggressively, then and close above even maybe the 32,500 level, then for me that will be, next week will be really key. I'd be looking potentially to be buying dips next week on the basis of the reaction from this support, because Bitcoin still has its use, still has, the sort of like the mainstayers there, the big whales there that are always going to support it. And it shouldn't have a lunar event. It may have a lunar type event, but there should always be a reasoning behind using Bitcoin and a methodology behind using Bitcoin. So, but I still believe it's going to test the 20,000 level, and at some point test maybe 12,000, 10, 12,000 in the long run, just based on measured moves, based on technicals, and based on sort of like been in the markets for 30 years and sort of like seeing things similar to this before. Not quite like it, but similar. Ethereum for me performed the best out of a bad bunch, really. It hit the support line that we've seen it react from 3 times before, and did exactly the same. So that deserves a little green arrow. I'm going to just click on that one, copy it, and paste it, and I'm just going to grab it and put it over there. There you go. There's 4 green arrows it's got now, so that's positive. Yeah, reacted off 1713 nicely. My gun to head we'll come to later, which did okay, but I was a little bit, obviously we closed the trade at the end of the day, so I wasn't in it to take full advantage. On the commodity side of things, gold has broken down. This has been something we've been talking about for a while as well. Look at the weekly chart. It's broken through the support level, which we could see here. It's got 4 decent lines on this upward trending support line, 5 if you can't count last week's, and this break lower this week. So for me, 1850 now. Let's go down to the hourly chart even. This looked like some sort of support before it broke as well. 1850 for me is now the sort of like the key level to really sort of that it needs to get above to sort of like reinstall the sort of like rally higher. But yeah, it looks pretty sick at the moment. We were talking about, we expect it to go down to around about 1780, although the measured move target for this head and shoulders formation is 1724. But really for me, 1780 again, I'll draw that line in. This was significant in the past as a support there, 1783. So still plenty of room on the downside. The 4-hour chart is showing signs of recovery. We've reacted from 1811, posted the bullish hammer, and should see some sort of recovery, potentially up to the 1835. But as I say, 1850 is resistance in my eyes. That's about me covered.
Thank you. Okay, let's get into FX then. Starting off with the dollar index, fresh 20-year highs yesterday, as we can see, right up there above that previous resistance at 104.53. Have to go some way back to find when that was last relevant. As we said, 20 years. There is a 261.8 fib level from a double bottom down here, which we've easily overcome. So I was just scrolling back on the sort of longer term charts to see where the next technical levels are really. And they're still some way above the current level. So this is when we were last up at these highs. We've got a resistance here at 111.31, and if we draw the long-term fibs on, we've got a 78.6 up at 110.25. So by breaking out of this level here, I think this is the sort of next targets that we can potentially be expecting to see on the dollar index over the medium to long term. So no signs of that slowing down as things stand at the moment. If we take a look at euro US dollar, that looks pretty sick. Broke down to new lows yesterday through 104.70 and now heading towards these lows here at 103.40. And if we scroll back to the left hand side, we can see that it was last at these levels in 2017, in January 2017. So that is the next key test for euro US dollar. Will there be any buying support? Will we get a similar situation what we saw last time we were down that level? Pretty much one-way traffic there. Then after that for pretty much a year. Not sure what will happen, but it doesn't look great. There's no sign of a bottom taking shape at the moment on the daily chart. If we take a look at cable, we can see that continues to march lower. We've got 78.6% in view at 120.25. No sign of that slowing at the moment, so expecting more downside there. We saw some pretty significant moves in some of the commodity currencies yesterday, no more so than actually Aussie yen, which was down almost 3% at one point. Really massive red candle following the completion of this head and shoulders top on the daily chart. Now we're seeing these head and shoulders pretty much everywhere on the yen currencies at the minute. Typically yen is seen as a bit of a safe haven, but obviously it's been absolutely wrecked over recent months. So I'm wondering whether what we've seen over the last few days with risk in stock markets and cryptocurrencies, whether or not the penny's actually finally dropping with a lot of people and they're realizing actually we are in for a pretty rough time with markets and risk assets. And we actually properly saw a bit of a flight to safe haven markets yesterday, and the yen obviously being one of those. So some big top patterns formed here. We've got a measured move target on Aussie yen at 85.12. So I wouldn't be surprised if we see prices continue to move lower on that. If we look at Aussie dollar, we broke through support there at 69.67. No signs of that slowing. Quite an aggressive move lower there. It's a similar situation with New Zealand dollar, US dollar, although that is actually at 61.8% fib level and at the moment holding on to it. And if we just scroll back to see why that's relevant, this is basically the pandemic move here. So from the lows in March 2020 to those highs in February 21, the 61.8% fib level comes in here, and at the moment that's doing a job at supporting prices. How long it will do it for, not entirely sure. So just to reiterate this opinion on the yen currencies, this is sterling yen. We can see a head and shoulders top, big aggressive break, and some pretty horrible looking price action. Bit of an attempt at a rally this morning, but already giving some of that up. If we take a look at euro yen, we can see some sort of top pattern here, but that's fallen into some decent support levels. So 133.15 is the key level for me there. If that gives way, then I'm expecting more downside. And finally, if we take a look at dollar yen, we can see we've got this intervention level up here at 130.00. That was where the central bank said they would likely step in. We've seen prices stall around this area. We haven't quite seen the same sort of top patterns that we've seen elsewhere in this particular currency. But for me, I think we're in the process of topping out here, and we could see a little bit of a retracement down. And given how strong this move higher was, that wouldn't be a massive surprise in my opinion. So I'm thinking there's a potential for a bit of weakness there. Moving on quickly to the indices, we have the Aussie first of all, which obviously the currency took a bit of a battering over the last few days. We've seen this fall to a 78.6% fib level here at 69.44 from this move here, from the lows in January this year to the highs in April. So decent support there and a really big engulfing candle as things stand at the minute. So that's a pretty nice way to end the week. If we take a look at the DAX, that's up 1.2% as things stand. Again, fibs coming to the rescue here, just from this period that we've got highlighted here. We've seen a pullback to a 61.8% fib level at 13,385, and the buyers have stepped in, and we've seen 4 consecutive days of upward movement. Still got this downtrend, which is likely to cap prices, in my opinion. If we take a look at the FTSE, we are engulfing all of yesterday's losses. Still a long way to go on the session, but this is a pretty encouraging sign. I haven't got any fibs drawn on here, but let's get that done now to see if there are any relevant levels. Let's get the 50 and the 61.8. So into the 50 level, we've seen some support come in, and we're engulfing all of, I say, yesterday's losses. So that could be a sign that we're about to see a bit of a relief rally on that. NASDAQ, again, fibs. Look at this. We've got the 50% fib level pretty much to the tick, stopping that decline on the NASDAQ. But if we just scroll to the left to see the relevance of that, this is the entire move again from the lows of the pandemic in March to those highs that we posted in November last year. The 50% level in yellow has pretty much nailed that. And if you were sitting there waiting for it or buying into that level, you're probably a good few ticks on side. Overall, of course, the trend looks pretty negative. So it may only be a relief rally, but there is some potential there, I think, on the upside in the short term. That'll do on the indices front.
Cool, thank you, Joe. I'll quickly jump into a couple of stocks to look at then. We'll start off with our biggest gainer and loser, as we usually do. And yesterday, our biggest gainer was Squarespace. Actually missed on earnings, but still ended up 48.48% up on the day. I've got the 50-day moving average and the 200-day moving average on the screen as well, just to kind of get a bit of an idea of the trend. I mean, it's obvious on this one, but it might help visualize it to people that are slightly newer to trading. So yeah, Squarespace up 48.48% on the day. Our biggest loser though was this, and this is Atento, down 36% of the day. And similar to what you were just saying, Joe, the 61.8 fib is held up perfectly here. I mean, it's still a really negative day, but the sell-off stalled right into that 61.8 fib, which if we go out to a weekly chart, we can see is from the lows of May 2020 all the way up to the recent highs. But yeah, pretty much to the tick as well. So fibs do pay a pretty key level, and if you can kind of get a confluence of factors, so you have a 61.8 fib, you might have a moving average, you might have a support area. They're the kind of things which, when you marry them all together, can create quite a nice trading opportunity potentially. I'm not saying this one really was, because this is a big sell-off, and I'd certainly remain bearish on this for the time being. But just as a general rule, I look for kind of multiple things to line up. We'll jump into a couple of other stocks. GME came right down back into the support level here. Let me throw that on. It's a bit messy, my chart. Let me clear it off a bit. Right back into the support level, which it tested back in March. Quite a key level actually, because below that we've got a lot of space to fall for GME. I think the next level, if we did get a break of it, would be this $40 level around here. So that would be a decent 50% move down from where it is now, over 50%. I'd expect to see a bit of a rally at this level, but what we talk about when we hit these support levels, we want to see a rally and some follow through. We don't want to see, I'll tell you what, I'll draw it on. We don't want to see price action go something like this. So a bounce would obviously be good. We then don't want to see a retest straight away, because that starts making a bit of a head and shoulders type pattern. And although this has been in a bit of a downtrend, as I said before, Head and Shoulders shows like this can be a continuation as well, not in a traditional sense for Head and Shoulders, but it shows that the buyers are struggling to regain control. And if that were to play out, like I said, we've got this move potentially down to $40, which would be a substantial fall for GME and where it is now. Coinbase, we had a bit of relief yesterday. It's been pretty dire the last few weeks, but we posted this quite bullish candle here. We are still in this kind of excessive sell-off, and I had a little look at this in a video yesterday. But this shows there is some life here. The volume was really good as well, so there's obviously people interested in the market at this level. But I would wait to see some kind of bottoming pattern before you kind of start getting too interested in this, because for now we're still in this downtrend, and there's no real sign. I mean, this is a good candle, but I need to see more than this to have a turnaround story on Coinbase. We're going to jump into a couple more. Cineworld, we actually looked at this maybe earlier this week, this descending triangle continuation pattern we had, and it started off playing out quite nicely. It broke through, and so far we had a bit of a retest. If I zoom in a bit more, we had a bit of a retest with this kind of shooting star type candle. That might not be the technical name when it's at support, but it shows the buyers tried to get back in, they couldn't, and then we have follow through to the downside, and that follow through afterwards is always what I think is important, because it shows who won the battle, and this time it was sellers. And it looks like we are heading lower on Cineworld. So if we kind of zoom out, what have we got here? We haven't got much. We're past any relevant fibs now, but we have got support at this kind of, where are we at here? 1850 level. It wicked off it here in March for the COVID lows. Hit it again in October of 2020, and I think that's probably a decent place to aim for price now. We'll jump into a couple more. S4, nothing exciting to see. I think we took this, we wrote this an idea. We got stopped out, looking for a continuation to the downside. We got this tweezer top type pattern at support, which kind of indicated the turnaround was there. This is quite a bullish sign, especially at a support level. We can kind of redraw this a bit better now. And that's why prices moved higher. I'd expect it possibly to come back and retest this resistance now. But I also, price can go anywhere. I wouldn't be surprised if it came down and retested it again. We'll have to see. And I think if we did get a retest, it could break through this time, because it keeps on testing it. We're in this downtrend. I think it's probably a matter of time before it breaks. We'll jump into a couple more. Rolls-Royce, we looked at that the other day. Barclays is the last one I wanted to look at. So Barclays, this is a weekly chart we've got here. We've drawn fibs from the COVID lows to, is this all-time highs? Not all-time highs, but the recent high. If I draw on a couple more fibs, maybe we can get a bit of an idea. So it's still right at this, what I thought it would be, 50% fib level. And this, again, is like, there's quite a lot going on here. As you can see, I've drawn up a lot. We've got a flag type pattern forming after this sell-off. As you can see, it's kind of coming up as a flag. And we've also got this previous support from back in March. So with all that being said, we've got the 50% fib, we've got the support from March, we've got this flag. If we were to get a break, and I'll tell you what, I'll remove the support so you can see it a bit better. But if we were to get a break of around, let's see what we could do. Kind of these lows here, I think we could see quite a nice move back into the 61% fib. I think that would be the next reasonable target here, which is also a level that's had significance for Barclays in the past. We draw on the support here. We had support back in 2019. We had resistance in 2020, and we had support again in 2021. So this is a very, very key level too. I'd expect buyers to be coming back in there if we did get a break lower from this flag pattern. Last thing I'll say as well, looking at this from weekly chart, you can see just like it's just doji central. We've got doji, a doji style candles forming here. We've got this hammer candle here. Shoot startup candle, sorry. And yes, this is an important kind of, it shows that buyers and sellers, they're both fighting it out. Neither of them is winning yet. We'll see who does win, and that will show where price moves next. But we'll leave it there on the stocks today.
Cool, thanks, Jamie.
Nice
okay, gone to the head trades from yesterday. So just quickly reiterate what it is that we're doing here for anyone that's new. Basically, we participate in a little challenge each day where we pick a trade idea live on the video. Each of the ideas must have a stop and a target. We place all the ideas at market and they're published to our TradingView profile. So if anybody wants to check them out, not only today's ideas, but ones we've done previously, feel free to do so. These trade ideas will expire at 9 p.m. UK time or when the stop or the target is hit. And we maintain the performance of these on a spreadsheet, which I'll bring up now. So yesterday we had 3 trades, as always. I went short of the US 10-year yields, which is a little bit of a alternative trade, not something we generally look at. Steve, you went in on calling the bottom on crypto temporarily, which seems to work quite nicely. You made 1.54R on Ethereum, so well done to you. And Jamie, you were banking on more woes for Euro US dollar, and you were exactly right with 1.66R banked on yesterday's trade. So nice little day for us yesterday. Well done, gentlemen.
Good stuff.
Another high, Joe. 2374.
Is that a new high? Let's have a quick look.
Yeah.
It's getting close. We got up here.
Yeah, not the all-time high, just like
relative. Local.
Yeah, recent high.
Yeah, decent. So this is how we're looking overall. Just quickly, we've obviously published a fair amount of trades now. Win rates typically around this kind of region. So if you are following these ideas, please keep that in mind. But obviously, when we focus on these trade ideas, we are looking for significant risk-reward ratios on these trades. So we're looking for big returns from these ideas that we're publishing. And that's why we've maintained positive performance over this time.
Yeah. The idea of this was actually to show how hard it is to trade.
Yeah, we was hoping to lose money, weren't we?
We were actually thinking we should be posting a losing performance. And the reason for that is because we're just making the trade up on the spur of the moment, under pressure. You've got to put a trade idea in, and really there should be a lot more planning that goes into a trade idea. Our win rate on our intraday trade ideas have a lot more thought in it. The win rate's a lot higher. The returns are better, but it still sort of like shows the how powerful technical analysis is.
Definitely. Well said, Steve. So does that mean you've got a trade idea ready for us?
Yeah, absolutely. Yeah. I got it. The last time I looked at oil, I picked a nice little winner. Just saw this topping formation on the 4-hour chart. If I look at the weekly chart, it's posted a bit of a hanging man candle, and we've got this trend line that it's stalled at. This it was a potential trend line because we had the first point and the second point. We've now hit a third point, and it's a hanging man candle. So that's a negative candle, although it's around the highs, near the highs of the week. It's a negative candle. So potential for a little bit further to move on the downside. And also on the weekly chart, also we're getting this MACD crossover. Dollar is stronger as well, so that's pretty significant. Daily chart, a more accurate line and a better trend line. We're stalling in front of it and topping out slightly. So I'm look at the 4-hour chart. I'm going to go for a similar type of reasoning from the last idea. Get rid of that one. But I'm going to be very aggressive with the stop because I can be. I'm just going to have a $1 stop. I'm going to target a move, a more aggressive move. I want to go for it, don't I? Actually, I did this yesterday, and it sort of didn't really. Let me just get the level in. Yeah, I'll leave it there. It's really aggressive trade idea. It's a 6-to-1 chance of winning, so that's the way to look at it. It's like you're in a race, a horse race, and the odds are 6-to-1. It's pretty decent odds. But yeah, that's my trade idea. I'm selling oil at 105.60. The stop is at 106.60. The target is 99.60. Actually, I'm going to move the target to 100.60 just because it's in front of the psychological level of.
Does that improve the odds of it then?
No, that weakens that. Obviously, just exactly. It improves my odds slightly. 5-to-1. It's only 5-to-1 now. You get on it quick before it goes to 4-to-1. That's my trade idea.
Steve. Cool. Jamie, do you want to go next?
Yeah, I'm good to go. If I get my screen up, here we go. I'm looking at Litecoin today. My trade idea is going to be selling it at this we're about $70 level, but I like a few things lining up here. We've had this big sell-off in all the cryptos, as we know. I'm taking a 61.8% fib of that leg down, and it's hit that pretty much to the tick, as we were saying earlier. This is also a previous level resistance and support that we've run into. And we've had this doji style candle at the resistance, which suggests that price could move lower. I've got to stop talking. It always runs away. So we're going to sell this here at 68.51. There we go. I'll type that in. We're going to keep the stop just above the recent high and just above the 618 fib. So it's quite a close stop at 71.51. And our take profit is going to be at $60.09. Which is obviously just in front of that 60 in case buyers jump in there. So this gives us a 2.81 risk reward today. Hoping to see a bit more of a sell-off on Litecoin.
Nice. Good luck, mate.
Thank you.
I'm going to take a look at dollar yen. Mentioned it in the roundup of currencies. Think it's in the process of maybe forming a short-term top, given that it's had a pretty spectacular run higher in recent months, actually. So we saw this big move down yesterday on the daily. We took out this support at 128.61. We're retesting it today. We have been a little bit higher, but we saw the sellers step back in. So on the intraday, what you can see on the hourly chart is a nice little range formation. So highlighted by these black lines, we've got the upper end of the range here, the lower end of the range here. We saw a break below that yesterday. And over recent hours, we've been forming this sort of corrective channel, which potentially could be a bearish flag. So we've seen a break below that. We've seen a close below the 10-period exponential moving average. The entry is a little bit better now than it was when I first started looking at this, which may be a concern or maybe just a way of improving my risk reward on this trade. So I'm going to sell dollar yen at the current price of 128.69. I'm going to have a stop loss above the highs that we've posted at 2 a.m. this morning, which comes in at 129.39. And I've got a measured move of this range. So I've simply taken the measurement from the high of the range to the low, projected it lower, and that comes in today at 125.97. So I'm looking for 4.18R on dollar yen today. Let's see how it goes.
Nice one.
Very nice. Good luck.
Okay, data-wise today, just bring that up quickly. We've got the US University of Michigan Consumer Confidence figure due out at 3 o'clock UK time today. So only one data point considered to be high impact for the trading session ahead. Obviously, it's been a pretty rough week, and I think how buyers and sellers react today and what sort of candles we get to close the week is going to be all important for how we set up for the coming weeks. So we'll be dissecting that on Monday. A few interesting points to look out for next week as well. We've got the Treasury Committee in the UK or from the Bank of England. We've got some retail sales. We've got a Fed chair speech, as well as UK consumer prices, the latest read on inflation. So plenty to keep us interested next week.
Cool.
Excellent.
Anything to add, gents?
No, be careful out there.
Indeed. Yes. Okay, cool. Have a great weekend, everybody. Hope you've had a good week, and we'll see you on Monday.
Cheers.
Bye.